Transaction Capital released their H1 results today, and joining me now for more perspective is the Chief Executive of the firm, David Hurwitz. Good to have you with us today. You've certainly had a wonderful morning. As we can tell, the presentation took place just downstairs here at the JSE's auditorium, but an impressive set of numbers. Headline earnings per share up by more than 22%. You mentioned that it's a tough environment. You've reduced your non-performing loans as well. How did you do it?
So yes, thank you for having us. We're very happy with the results. As you said, 22% organic growth, non-performing loans coming down, and in truth this has all come from organic initiatives. So we haven't had to take on additional risk, we haven't had to do acquisitions, we've stuck to our strategy, our credit strategies and our origination strategies, and this has helped us to achieve this result. And the big headline is that we believe that this level of earnings growth is sustainable into the medium term.
The big headline for me is in about the fourth or fifth paragraph of your results, David. It says here, the depressed consumer economy does, however, provide Transaction Capital's Risk Services division with substantial opportunity to take advantage, it says here, of its strong market position and reputation as its client base displays increased demand for structured and complex credit risk management and capital solutions to better manage credit, etc. A rather long-winded thing, but what are you saying? So in other words, when people are depressed, they need more money, and you're providing that.
So not exactly. What we're saying here is that the large credit providers in South Africa, being the banks and the retailers, have a credit exposure to manage. We've seen that this environment makes it more difficult to manage, and we have the scale, the reputation and the ability to actually help them manage that risk down to acceptable levels. So there's an increased demand from our clients, being the retailers and the banks, to assist in this regard, and we are seeing this move into new market segments. So in the municipal space as well, there's a big consumer exposure. Municipalities have to collect their debt, and we're assisting there. When we are collecting the debt, it also allows us to improve their working capital flows, as well as sometimes inject capital into their space. And munis is one new market. We're seeing this in the gyms. We're also seeing it in the insurance space. So a real opportunity for us to provide consumer management and collection services into the large corporates in South Africa that engage with consumers in general. It's
a huge task that you obviously have on your hands, and the likelihood is that the direction going forward might get even tougher because of the sluggish economic landscape in South Africa and increased interest rate cycle that we're approaching, and the inflationary relief expected to dissipate. How do you manage such an issue? Because you mentioned the municipals, and I want to get into MBD solutions, which is obviously seeing a lot of opportunity there. How do you manage it when it's so difficult, actually?
So we talk about our businesses being very defensively positioned. Investors generally think that the businesses are counter-cyclical, that we do better in difficult environments because there's more debt to collect and the consumer exposure is larger. In truth, we're not counter-cyclical. We are defensively positioned, which allows us to prosper in both a difficult environment, but we'll do better when the environment improves.
On that, are you looking at any expansions further, especially outside of the South African market?
So we are considering, as I said, expanding into new markets.
What does new markets entail?
So
because you've let go of the credit lending and the unsecured lending space. Where would your focus necessarily lie?
So new markets would be, as I said, different verticals. So we've spoken about banking and retail being our traditional markets. We'll go into insurance, and we've gone into the municipal space now for a few years. Other new markets could be geographic as well, and we've started thinking about new markets, I think more so in our asset-backed lending business than in the collections business, quite frankly.
We wish you all the best, and thank you so much for coming through today. That was David Hurwitz, the Chief Executive of Transaction Capital.